Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Wednesday, September 25th, quickly exiting another month here. It won't be long before we're into October. We are going to take a look at one out of the energy sector. Exxon Mobile today, probably well aware of this. You might have gotten gas there today on your way to work or on your way home. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you're a dividend growth investor. That's what we focus on this channel. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hit that subscribe button. Come on back and join us in the future. Make sure you click that notification bell so you're notified whenever we put out any new content. I do the stock pick of the day videos Monday through Thursday whenever the market's open. I also do a portfolio update every Sunday morning where I show you everything in my portfolio right out in the open. Nothing to hide here, fully transparent. I want you to see what I'm buying, what I'm selling, any options I've been in, any dividends I've been paid. Sometimes I do make sales in the portfolio and reallocate some funds, so I cover that as well. And watch the videos as long as you can, all the way to the end if you would. Watch time is another one of the metrics that the YouTube algorithm looks at. So watch time if you can. Like I said, watch it a little longer than you could. I know sometimes, and I do it too, I watch YouTube videos, so I know I scroll to parts I want to see and then scroll past others. But if you at least watch to the end, that would help me out. And really do appreciate all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now this is the vested interest stock screener. This is all we will be running through these metrics in the video here. This is also how I look at a company on a high level to see if I am interested in adding it to my portfolio. Thousands of stocks out there. So this is my initial screener. If it meets 5 of 8 or 6 of 9, if it's a financial company like a bank or an insurance company or a credit card company like Visa that we did yesterday, then I add it to my watch list. That doesn't mean I'm investing. It means it goes on my watch list, and then I do more of a deep dive into the financials of the company, try to figure out a price I'm willing to pay by doing a discounted cash flow analysis, and then I wait for the price to align, and then and only then do I add it to my portfolio. Now back to Exxon Mobil. You can check them out on their homepage, corporateexxonmobil.com. That's corporateexxonmobil.com. That is their homepage where I pulled this information from. Who we are. Exxon manages an industry-leading portfolio of resources and one of the largest integrated fuels, lubricants, and chemical companies in the world. We've evolved our operating model and global organization to better leverage the scale of our increasingly integrated company and global brands. We have 3 core businesses with operations around the world. They're primarily a oil and gas company. That's what they do. And there are 3 core business models here, or business entities here, operations. You can see they are getting into the low carbon solutions, so carbon capture. If you want to know more about that, go ahead and check that out. You go to their homepage and click on that. Product solutions, right? So they provide oil for chemicals. So they're producing some products based on oil-based products, and upstream oil and gas delivery, right? So they're an upstream provider. Now, the reason we are looking at them down 1.96% on the day, we are talking about Exxon Mobil Corporation, ticker XOM. This is out of the energy sector. Closed out the day at $114.75. 52-week range as low as $95.77, as high as $123.75. They are kind of floating between their 52-week high and their 52-week low, but they are not within 15% of a 52-week low. They've got to be right around $110 per share or lower to be within 15% of a 52-week low, so not quite there for that metric. Market cap of $509.815 billion, so they're a large cap company here. Beta of 0.86, so they are less volatile than the overall market. 1 being the market, beta is the volatility of the market. Again, 1 being the market, anything under 1, under the volatility of the market. Anything over would be more volatility than the market. PE, price to earnings ratio here, $13.73 per share. That is pretty decent for a company like this. Now, you would want to compare this PE to like a Chevron or Occidental, a company. Those are a couple other companies in the same vein here. EPS, earnings per share, sitting at $8.36 per share. Earnings date, October 25th through October 29th. Sometime in that window, they'll be releasing their earnings call. Forward dividend is $3.80. They are quarterly payers, so divide by 4, though we will see that here towards the end of the video. Nice starting dividend yield of 3.25%. Ex-dividend date was August 15th. Looks like they paid out on September 10th, so kudos to those of you who got the dividend on the 10th there earlier this month. Now, you would be in line for their next dividend, though obviously you'll have to wait a few months to get it since they just paid it out. Now, the one-year target estimate, at least according to Yahoo Finance, $130.93. So they see some upside from where it currently sits as far as price appreciation. Whoa, excuse me, sir. Whoa. Sorry about that. Now, jumping over, we're going to look at dividend yield theory. To do that, we look at their 5-year dividend yield average of 5.08%. We compare that to their current 3.25%, or over here where it says forward annual dividend yield, 3.25%. Since it is lower, that speaks to overvaluation on this one. So currently, at least according to dividend yield theory, this one is potentially overvalued. Now, I will say oil and gas in the last 5 years did have a huge drop a few years back, right there whenever COVID hit. These really oil and gas companies really fell off the map. So that would have been a very, very high yield at that time. I actually bought a few years ago, made like an 80-90% on Exxon Mobile and Chevron, made like an 80-90% return over a year and a half, and sold them both. So I do remember that big drop. So that dividend yield average is definitely impacted by that. But according to dividend yield theory, currently right now, it's potentially overvalued. Payout ratio is in good shape, 44.98%. I like 75% or under. Now, jumping down to free cash flow, I want growing free cash flow over time, because typically if a company has growing cash flow, they have growing dividends. 2021 here, you can see $36 billion in free cash flow. 2022, big jump up to $58 billion. 2023, down to $33 billion, and the trailing 12 months so far, $32 billion. So it looks like a very similar year to 2023, though we'll have to wait for the last few months to shake out to see what 2024 holds. Repurchase of shares, they are repurchasing shares, especially over the last 3 years. 2021, $155 million. 2022, $15.1 billion. 2023, $17.7 billion. So far, they're continuing that trend in 2024. Really aggressively rebuying some shares here over the last few years. Now, jumping over to stockanalysis.com, they have 16 stock analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $120. That would be a 4.6% increase from where it currently sits. Average estimate of $134.06. That would be a 16.85% increase from where it currently sits. And if it happened to hit their high of $149 estimate, that would be a 29.88% increase in the share price, and all the while you could collect that 3+% dividend yield that they currently have, at least if you were to buy them now. Now, getting in statistics, I like to look at return on invested capital and return on equity to see how well a company is reinvesting its capital back into itself. I like 10% or better here. So return on equity at 14.69%, over the 10% I like, and return on invested capital just over at 10.67%. Now, EPS growth, I like 5% or better projected over the next 5 years. They don't quite meet it there at 1.38. That's pretty low, and revenue forecasted to be negative, actually. I don't like that. I like to see positive revenue growth, though it's not one of the metrics we technically use as part of the criteria on the channel. It is part of metrics that I use when I do more of a deep dive. Now, a quarterly payer here, this is their dividend history, payout ratio of 45.49%. Again, under the 75% I'm looking for there. Very well for where they're at high single digits, 3.8% dividend yield currently, with 4.4% dividend growth. That's pretty good growth, actually. Growth over years, 43 years of growth. Buyback yield is positive at 0.82%, so they're doing it efficiently, at least whenever the shares are decently valued. Shareholder yield of 4.15%. That's good. You want positive shareholder yield. Now, jumping back in time, you can see here in 2022, February 9th, they were paying 88 cents in dividends. They raised that up November 2022 to 91 cents. Again, November 2023, a raise of up to 95 cents. And I would anticipate if they're going to continue this raise, that you will see another raise in November in 2024. So coming up here in a couple months. They do pay out on the March, June, September, December timeframe like most companies do. Now let's jump back over to the screener, understand the business. That's where we started. Check there, growing free cash flow last 4 years. They were up and down, right? They had the really good year up to 58 and then kind of down a little bit. Some of the drops in the 30 billion range could be accounted for by the shares, but that big drop from 58, which was a big jump up, but then that drop back. So their 1 year kind of threw them out of whack there, but overall, pretty steady beyond the one big year that was up. Growing dividend, yes, nice growth in dividend, 4%, a little over. Dividend payout ratio is under 75%, under 50%. So check there. Dividend yield theory says it's potentially overvalued. Now this comes with a little bit of a caveat. You had, a few years back here, you had them where they really dropped down significantly and their dividend yield really shot up. So that is impacting it, but we won't give them a check because that's just the way it goes. It's not within 15% of a 52-week low. If it drops a little bit lower, if it was to hit 110 or lower, it would be, but not quite there. Return on invested capital, return on equity, good, both over 10%, check there, but this is where it gets them. Earnings per share growth was under 5%, so no check there. 1, 2, 3, 4. This one would not make it onto my watch list right now. Let me know what you think of Exxon Mobile in the comment section down below. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. Let me know what you think of Exxon Mobil. Is it in your portfolio? Is it one you're watching? Is it one you're looking to buy? Or maybe is it one you're selling? I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Exxon Mobil you'd like me to cover in the Stock Pick of the Day series, go ahead and put it in the comment section down below. I'll work it in the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.